Good Friday morning, Market Chameleons, and everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the screen share, the disclaimer. Neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. If you need advice, please search out one. This show is for informational purposes only. With that, D, take one more look at the disclaimer, everyone. You ready to get going?
Yep. Good morning, everyone. I'm going to share my screen here. And as usual, I'm just going to remind you guys, or if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube, and Will let me know, read them back to me. And to give you a couple minutes to put those questions in, we're going to start out taking a look at our pre-market report to see if we could get insights, what's going on in pre-market hours, and then we're going to move on to the questions. So let's start out over here. We are on our pre-market report, and up top, you will see this calendar view. You can see as I'm hovering over it, and this allows you to go back to a historical date if you wish to see what happened in pre-market hours on a specific date. Here we display the last weeks of data, and this kind of helps you look at the top line statistics. If you could eyeball it to see if there are any particular trends, if anything unusual pops out, or what usually happens from day to day as a comparison. And today we are on March 22nd. So far we see there are 384 stocks trading higher in pre-market, 439 stocks trading lower. As far as volume goes, we have 127 million shares trading on up volume, 62 million on down volume. And if we convert that volume to dollar value, we have $980 million worth of stock trading higher, $3.5 billion worth of stock trading lower. So from this perspective, looks like so far there's a bearish lean in pre-market trading. Let's look at it from a couple more perspectives, then we'll move on to our questions. I'm going to come down here, and now we have a more granular view of what's going on in a pre-market. There are stock symbols in here with price changes, volume, market cap indicate alerts for stocks trading in pre-market hours. We have our most active stocks, biggest percentage gainers, and biggest percentage decliners. Coming down here, and I see 25 stocks made our biggest percentage gainers list, 80 on our biggest percentage decliners list. So from this perspective, it also points to a bearish lean in pre-market hours. Now, to make this list, we set certain thresholds in place because stocks in a pre-market can trade with very low volume or low liquidity. So we do place thresholds in to make this list. And if the stock is trading in pre-market hours and makes this threshold, it could make it onto this list. And that does include small cap stocks. We see here market caps. A lot of these are small caps. That does include ETFs, leverage products, inverse products, and so forth. So to narrow it down to a small group of stocks, we could start using our filters. And over here, this filter allows you to filter by your watch list. If you track a group of stocks that you're interested in mostly or exclusively, and you want to filter this report by your watch list, you can do that. We're going to use this filter here in ETF and drop it down, and now we got different ETFs to choose from. And I'm going to select this one, SPY. When we do that, the list below will get filtered by the stocks that are holdings in that SPY ETF. In this case, it's the S&P 500 stocks, right? The SPY tracks S&P 500 stocks, and now we have the S&P 500 constituents here. And we could see what's going on with these stocks. And 3 of them made our biggest percentage gainers list. Keep in mind they have to meet those thresholds. 5 on our decliners. So it's slightly bearish, not overwhelming, maybe close to being balanced out. But we did give it, we gave it a couple minutes, so I still want to get to the questions if we have some, so I'll take them now.
Yep, nothing's popped up.
Okay.
Well, actually, one Heat's just popped up. One GMD and Will. How does this data can help to find the range for any index for range bound trading? If you can explain with example, I would appreciate it. Thanks.
How does this data help find, say that, can you read that back to me again?
How these data can help to find the range for any index for range bound trading. If you can explain with example, I would appreciate it. I mean, I'm not sure, Heats, what data you're talking. It could be the pre-market data or the data, some other data point on the site. Maybe you could expand the question. I don't really understand it myself, but that just popped in.
Okay.
And we do have a button. If you want to come in live and ask, you can ask it live too.
Yeah. But I'm going to go to SPY as my default, and a lot of times I have to, when I hear questions, and the problem is when they're not very specific or point to something, I could start trying to answer it by making an inference what this possibly means, but one important lesson, if you in trading, when you're trading or analyzing, you really need specific details, because otherwise you don't want to do things on assumptions. One of the things is verification and confirmation, but we're not doing a trade right now. This is just a discussion. And when we talk about ranges, right, the trading ranges, and we're going to let's use SPY, S&P 500 index, because I think you mentioned indexes. When options prices, right, that's what part of volatility and option premiums is a market consensus on the range that a stock could trade in, right? That's the straddle, right? The straddle is like, well, this is the range we expect it to trade in within this band, you could say. So over here, let's just start out, like, before I get to that, here's a chart yesterday of SPY, S&P 500, right? So this blue line here, that's the prices that SPY traded at yesterday. And the red line, the dotted line, is just the previous day's close. So then we kind of have a reference how the prices, yesterday traded versus just where the price closed at the day before. It was always above there, and we could see the distance it was above. And then we have these dotted green lines, right? What are these dotted green lines over here? And the dotted green lines are those are standard deviation bands. Okay, so the standard deviation bands away from the previous day's close. And when we talk about ranges, right, what we do is say, okay, well, we don't know if the stock is going to go up or it goes down. We don't know. We could try to create statistics and put inputs in what we think is more likely, right? And in this situation, more likely go up or might likely go down. And we also don't know the distance it will go up or down, but we could create statistics on what range does it usually trade in, right? Within what band, a volatility band, based on the stock's liquidity. So, one quick way to create a range is say, okay, well, what is a standard deviation move in the stock, percentage wise from day to day, right? We look at a day to day standard deviation move, and then we know where the stock closed. So from the previous days, we could say, okay, show me what one standard deviation up is, one standard deviation down. And now we have this volatility band based on where the data, where it's been, recently trading. I think this is looking at the last 20 days, right? So if it becomes more volatile, then the bands will increase, less volatile, they'll decrease based on where the most recent data is. So this is a one standard deviation move up or down, right? And that's based on the historical stock data, the recent 20 days. But what it's saying is if the stock is moving anywhere close to where it has been in the recent 20 days, this is a volatility band. But we could also say, well, what does the options imply, right? So that's backward looking. That's saying, okay, that's where the stock has been. But what about the options? What are they implying? Like because the options themselves are like, forward-looking estimates, right, by the market. That's what they're estimating. So people are taking in all kinds of information from everywhere, and they're buying and selling, and then you come up with option prices, and where's the consensus there? And here on this activity, we see different expirations, right? So because we have these different expirations, they have different days, right, to expiration. These are the amount of days left for trading. This one yesterday expired, 0 DTE, 1 day, 2 day, 3 day, 4 days. So for SPY, we have a lot of different expirations. And if we look at the option prices and come up with, what is the straddle? Well, we could come up with the straddle price. So this is from yesterday's close. So for today, what is the range? What is the market expected range, right? And we came up that the straddle is $2.32. So that's where, it doesn't mean that's where it's going to end up. That's where the markets, right, where the buyers and sellers break even, right? The buyers of options and the buyers of the straddle, sellers of the straddle, that's where they break even, right? Because that's where it is. So up or down $2.32. Obviously, if you think it's going to be less, then you would be a seller of the straddle. If you think the range or the magnitude of the move is going to be greater than that, you would be a buyer of the straddle. But this is so far where the straddle is settled. So that's where the buyers and sellers break even. So we say that's the market estimate, right? That's the best fair value market estimate. Well, what does $2.32 translate to percentage move? So we could take the $2.32 and take what percentage of that, if of the stock price, and then we come up with a percentage range, up or down 0.4%. Right. So what is one standard deviation? Right. If you take one standard deviation up, one standard deviation down, then that is saying that the expectation is, 67% of the time, basically, the stock is going to trade inside that band. And 1/3 of the time, you might go up or down below that band, right? So 67% of the observations, basically, or 2/3. So that's for, the 1 day, 2 days. So keep in mind, these here are not looking at the historical stock prices anymore. These are based on where the options are being priced. And obviously, financial instruments, those are forward-looking instruments. Those are trying to anticipate what will happen in the future. So if you're looking at, ranges, like anticipated ranges that something will trade in, like a band, then one way to look at it is, we could compare historical ranges, and then we could look at the forward-looking or implied ranges from the options markets, right? You could even compare the two to see even how much they diverge, right? So that's one way to look for, and look, I'm not sure if that's the question, right? I'm not exactly sure, but I'm just inferring that, something with ranges and indexes. So that's,
let us know if that helps or answers the question. Rob also mentioned the one possible answer to is the standard deviation per date on the option chain as well. Maybe perhaps Steve could show how you get the standard deviation from the options chain.
Yeah. So if you go to the options chain here, we'll do SPY. So when you're on the options chain, over here, you do have these different expirations. So let's just go out a little bit further. Let's say March 26. So we're on March 26 here. 5 calendar days, has 3 trading days left. So if we wanted to just put in what is the implied range, right? What is the implied range standard deviation? We could just do this, one standard deviation. So that is up and down. So this is where the current, right, straddle is anticipating that the stock, will finish somewhere in between here. 67%. Remember, this isn't here. These are in all these prices are ongoing. Today implied vols could go up, could go down, but as of the last snapshot, right? If we look at it, then this is a one standard deviation move up or down. Okay. We could also look at historical data and just here's an average up move, up down move. We could put that in there to see how that. So if we just took the average up move, right, of all the average, if we took all the up moves and said, well, over a 3-day period, I think this is looking back like, I don't know, 4 years or something, over a 3-day period, when the stock is up, on average, how much is it up? All right, so we take a percentage and we say, okay, it's about, it would be around here, 530. What about all the down move? If it's a down move, right? If it is a down move and we took the average of all the down moves, where we're going to end up? Well, it's down here. So you could see here, there's like a skew even, because the down moves are a little bit, happen to be of larger magnitude. Right. So this isn't taking the average of all the moves, it's splitting them up and saying, let me split it up into buckets. We don't know if the next move's up or down. If it is up, on average, how much does the stock go up when it goes up? And if it is down, well, let me put it into buckets and take all the down moves and on average, when it is down, what is the average move down? That's what it's doing. So you're going to have, so this isn't an equal, right? It's not going to be equal both ways all the time. And that's based on just historical data, right? That's it. That's all it's doing, is taking the historical data and giving us a reference. So this way, now we have kind of a historical range, right? Where the stock on average trades between, right? Well, the market, could, anticipate that the range will be smaller, it could be wider, it could be, there's all kinds of buys and sells going on with different information. If we we think it's going to be low volatility for the next 3 days, though that band could come in. If we anticipate some kind of a move based on, maybe certain events happening, maybe Fed meetings or some, certain announcements coming out, then the range could expand, right? So now we have a historical perspective, right? And we also have, what the options imply, right? So the options you could see here are implying right now a tighter range, right? That the stock will finish within a tighter range than it has been historic, that the stock has traded historically. So those are like kind of the two just for quick reference, that you could just click on and really quick, just see where those strikes would be in the yellow. You could also, some of these other ones, these are also kind of ranges. You could see in the last 2 weeks, what is the highest and lowest SPY traded. So you could see in the last 2 weeks, it's been, pretty tight. See in 1 month. Oh, sorry. Sorry. These are the 2 weeks. I was looking. So the high was somewhere in between these two strikes and the low between these two. So then you could get a sense of, the high-low range, right? This isn't the volatility range anymore. It's more of what was the most recent 2-week high-low range, right? So these are other reference points. If you wanted to do a 1 month, let's go to 1 month, and now we could see in the 1 month. So we're here right now, we're near the high, right? We're already here near the high. There's the low, 504. So you can see here where the stock is relative to its 1 month. We can do the 52-week high and low. So 52-week, and wait, where was I? Oh, all the way down here. Okay, so that's the idea behind these ranges, right? That you could also just have a reference. What is the 20-day moving average? How far away are we from the 20-day moving average? So the 20-day moving average is over here. And, we're like right here right now. These blue are saying that this is where the money is. So some people look at it as, did we deviate too far away from the 20-day moving average, right? And how are the options if we have a pull towards there? The idea is like that eventually the stock, trades around the 20-day moving average. 50-day moving average, same. How far away? You could see here we're pretty far at this point from the 50-day moving average. 250-day moving, then we're even further away, all the way down here. So, there's no one way to look at ranges, because it's how you want to define it. Is it a high low? Is it a volatility range? Is it what the markets are implying? But different reference points to consider. So,
all right. Heat
yep.
says thanks. We've got about 6 minutes left. Any last words of wisdom?
Yeah, I mean, I guess, if there are no questions, I might just stop it here. I guess I don't have anything to add to this that I could think of. So there are no questions. Yeah, we'll just end it here. Everyone have a good weekend. Have a great trading day. Stay safe out there. Hope to see you guys on Monday.
Yeah, thanks for the question, Heats. It got us going to a conversation. Great job, D, as always. Everyone have a great weekend. Actually, Rob says another indicator is the daily volatility index chart that he uses. Rob, thanks for all your comments, Rob. Those are helpful too. Great job again, D. Everyone.